and looking forward to a really great evening and conversation tonight. You may have seen the agenda, but just as a quick overview, we're going to have our esteemed speaker here with the moderated panel with Gowri Shankar, who I'll introduce in just a moment. And followed by that, we'll have a short a little update and kind of preview as to next year with regards to TiE Seattle. And then we'll hear from Akhtar Badshah about his new book and his launch. Hopefully today you received an email to include your address to receive a copy of his book, a signed copy of his book that'll be delivered to you here in a couple of weeks after today's event. And then we'll go, Zoom will allow us to get into some breakout rooms, which will allow for some more intimate conversations about our event today, and hopefully some time for everyone to catch up with one another, and then we'll close off. So be comfortable. If you feel comfortable with your video on, that's great. If you prefer off, that's okay, also okay. Initially, everyone will be on mute. During the Q&A portion after the conversation with our speaker, we will be able to turn on your mic so that you can ask questions. Gowri is going to try to weave some of the questions you have throughout the conversation, so feel free to put them in the chat window. For those of you new to TiE, we welcome you. This is an organization that is near and dear to my heart and to the board that's all in attendance as well, that's focuses on fostering entrepreneurship worldwide. And we accomplish a lot of these really ambitious goals through our local chapters. And I'm honored to serve in this role as president of TiE Seattle and have this conversation with you tonight. So we'll move into our speaker this evening, who's moderated by Gowri Shankar, who is a board member and the co-chair of the Z5 Catalyst Fund. Gowri is a friend and a mentor as well to me personally, and I feel lucky to have gotten to have a better relationship with him through this process with TiE. He is a mentor and advisor to a number of people probably on this line and throughout the startup ecosystem, and our community as a whole is better off with him here, making sure we're straight-lined and thinking first about the entrepreneur and the success of our community. So handing over to Gowri, thank you. Please go ahead.
Great. Madhu, thank you. Great to see some of you, hear from most of you. The biggest thing I've missed about 2020, of all the things that I've missed, is just catching up on coffee or a drink or going out to lunches and dinners. That's the hardest part. But I'm glad that we still are able to connect in virtual situations like this. The greatest thing that I saw, a positive out of 2020 that I thought, knowing all the negatives and all the things that are going on, it is incredible that we didn't know that this pandemic was on us almost a year ago. Now we have a vaccine that's rolled out. So humanity can come together and overcome a lot of things. And this is the greatest test that we've had, at least in our lifetimes. A lot of good things have also happened from a business setting, right? The startups are getting funded. Good ones are getting really funded. We have Easy Natarajan on the here. He was Z5 Catalyst first. CoreStack was Z5 Catalyst first funded company, and we're glad that CoreStack is growing. Like CoreStack, there are lots of other Seattle companies that have gotten funded in 2020. It's great to see that. And, a lot of behavior changes that has happened and that will continue to linger on. The thing that struck me was how time had compressed more than anything else. The thing I always felt was it takes a long time to get things done, but in 2020, what would have taken decades just took weeks, right? If you just take e-commerce, right? It's been growing 1 or 2% for the last 20 years, but in the last 10 months, it's grown probably 18 to 20% overall. So suddenly, what happened in couple of decades happened in a few months. Much like that, lot of things, good things continue to happen, but we still have the pandemic amongst us. And I hope all of you continue to be safe and be healthy. It is a great honor for me, and thank you to the board and to Madhu for asking me to moderate this event. It's a great honor for me to have this conversation this evening with Abidali Neemuchwala. Abid, I've got to know him this year as he joined Dallas Venture Capital. And it is a striking to meet somebody in a setting that is very different. What I mean by that is I met him as a venture capitalist. And prior to that, he was running a really big company, right? Wipro is a really big company. A lot of us know it. And probably many of us have interacted with Wipro. From that to suddenly, come to venture capital, that was a big change, at least from my perspective. And we're going to explore that this evening. What I thought I would kick off is invite Abid to first share his journey from where he started to being the CEO of Wipro and now as a venture capitalist, so that we all get a view that is a little bit more than just bios that I could read out from from my cue card. So Abid, thank you very much for being accepting to be part of this evening on behalf of TiE Seattle. And if you could start off with where you started and what your journey has been.
Thank you, Gowri. And first of all, thank you to Madhu and the board of TiE Seattle for having me in your holiday event. Wish all of you a very happy set of holidays. A lot of us celebrate Diwali. Thanksgiving has just been, we had Thanksgiving, and then, of course, a lot of us I know are waiting desperately for 2020 to get over. So this time the December holiday has a new significance and a new year. So hope you have a happy new year and a great holiday season. Gowri, one of the things which, as you were kind of articulating the transition, I was thinking and I felt that actually I've always been in a startup. I joined TCS as my first company straight out of IIT Bombay campus. And at that time, TCS was a startup. The revenues were about $20 million. I don't know, the words ARR were not coined at that time, but a very small revenue. Everybody in the organization knew everybody else. And there was a grand vision that attracted me. At that time, it was very popular from the campus to go to American multinational banks and oil companies. Citibank and Schlumberger were the biggest employers over there. And what attracted me to join TCS at that time was the vision of being able to create a company and an industry at that time. Obviously, because I joined TCS as an engineer, I loved my first 5 or 6 years doing hardcore engineering, program management, database activity at that time. The technology that was most in demand was client server, which was kind of new and up and coming. I know it looks legacy, or some of the people on the call may not even know what that means. But very quickly, I kind of tried to move into business development. And I remember, there were 2 other startup roles I did. One was I had the opportunity to go and start the company's presence in South Africa, almost at a time when Nelson Mandela had just got sworn into South Africa. And, I was one of the early TCSers to kind of land up over there and start operations there. I got an opportunity to go to Japan and sell IT services. One of the things I believe has been fun for me, because since then I've always been in roles where you are always selling to customers and you're taking responsibility for customer relationships. Is the best place to learn sales is Japan, because if you can sell in Japan, you can sell everywhere. And that was one of the interesting parts, because from being an engineer and a programmer, when I wanted to move to sales, I was given that opportunity, which was great. But I didn't realize that the opportunity being given in Japan was the most difficult place where you could sell. And I thoroughly enjoyed that. Obviously, after that, the whole Y2K opportunity came up, and I came to the US the first time in 98 to sell Y2K. And after that, obviously never looked back. I've been very fortunate, very blessed, and also very lucky through that journey. This third time I got an opportunity to do a startup again was around 2008, just around the global financial crisis, when I got to set up the TCS's BPO business. At that time, business process services and verticalization and all were new in the industry. And that was another startup, from running about a third of the company, I went down to almost starting to build a business from scratch. And then I was fortunate to build it up to about $2 billion in revenue over about 7 years or so. So that was another, I would say, a startup opportunity that I was fortunate to have and build a business. And then came the opportunity to be the CEO of Wipro, which for the last 5 years I thoroughly enjoyed doing it. And that was, in some sense, how you pivot an organization, how you undergo transformation. As the digital age, every organization has to undergo the transformation, building a digital business, digital revenues. And there was my first encounter with the formal venture capital when we set up the Wipro Ventures as a corporate venture capital, hiring a co-CEO for that, one from Intel Capital, and then combining with another technologist from the CTO organization within Wipro. And I saw that opportunity closely. So here I am. I think the opportunity now, after 28 years in the IT services industry, when I took this decision, it had 2 or 3 objectives. Number one definitely was an opportunity. I'd been blessed to learn so much, have so many mentors, build businesses, and be able to give back in terms of being able to mentor startups, being able to mentor teams who could create the next set of unicorns and create a new industry. And that is why when Dayakar and I kind of visioned the Dallas Venture Capital mission, we kind of tried to focus not only here in the US and especially Texas in the US, where both of us are located, but also the connection with India, because we could create another industry altogether, supporting startups in India as well. So that has been the motivation, and that has, in short, been my journey. I've been an IT executive for 28 years, a venture capitalist for 3 months now.
But I'm sure that all those 28 years you were learning every day, as you said it. It's interesting the way seems like you've approached every single opportunity that has come. You've always thought of it as, hey, this is a new beginning, even though it might have been within the same organization. Is that something that you also talked about mentors? Is that something that along the way you met mentors who said, hey, hurdles are there for you to overcome? How? Because it has a lot of parallels with young entrepreneurs, right? Because they all of them go through ups and downs, and it cannot be that you can only be on the down. How did you see every opportunity as a learning experience, and how do I grow from there?
Absolutely, Gowri. Some of the decisions I took were very difficult decisions, and I couldn't have taken it without mentors. For example, when I was 26, 27 years old, and everybody at that time wanted to come to the US. And when I decided to and agreed to go to South Africa, all my friends said, "What are you doing? Are you out of your mind?" And without a mentor, entrepreneurship is all about risk taking. And there are always moments where you start doubting yourself, whether you took the right decision or not. And that is when I've always had mentors. I got smarter over time, and then I started naming mentors. So obviously, early in life, I had mentors who a lot of them were my supervisors as well. Sometimes they were not my supervisors, but I got mentorship. But later, especially when I became CEO, I identified 2 ex-CEOs whom I named them and had their agreement to be my mentors, because whenever you're doing something new, something risk-taking, something that not everybody, the herd is not moving towards that, having a mentor, having somebody whom you can pick up the phone and ask a question and get a response which helps you think through what you're trying to do, the challenge that you're facing, somebody who's seen the world a little bit more than what you've seen. Sometimes, the perspective that could be brought differently is great. And that is why, as I said, when I decided to get into venture capital, it was with the primary objective of being able to bring value beyond just bringing capital to entrepreneurs in terms of helping them. And one of the things that when I was on the other side in large services organization, both when startups sold to me and startups, we partnered with startups to sell to Fortune 500 customers. The biggest challenge I used to see is a great products, great ideas, great teams, but their ability to message and understand the buying process of large organizations. Because finally, to be successful as a business, you need to have an understanding of why somebody will buy from you and why now will they buy. Otherwise, sometimes some ideas are early, some ideas are great ideas, but they don't become successful businesses. And those are some of the learnings that I had on the way. And I found opportunities where I could help startups to think through that with my experience.
Great. I want to pick up on that one of the threads that you just mentioned, messaging and storytelling, right? And this is extremely important for every startup, because they have to not only convince their own employees, but they also have to get capital, they have to get partners, they have to get customers, and so on. How and you now, even though formally you've been only a VC for 3 months, but you've seen enough startups, right? Where have you seen the art of storytelling? So for whatever audience that they are going after, the art of storytelling, and how a lot of the time it's overlooked by startups, and why is that? Is that because they think they have the best product, or they think that, hey, this problem is what you should be solving, not realizing how else they should how else the buyer is solving the problem? But where you see this story evolve in startups?
So Gowri, one of the things that I've seen, and I might be generalizing a little bit more, but at times the entrepreneurial teams are very passionate about their idea and their product. So they're able to come up with the product story very well. The question, especially, and I'm very focused on the B2B sales, selling to large enterprises. Large enterprises have a process to consume technology. The large enterprises have a process to innovate. So you could have the most innovative product and you could have the best technology, but if you don't understand how they would consume it, it becomes difficult to make that connection. Because as part of my sales experience, one of the things that I have learned is that for somebody to write a check and buy, doing POCs and proof of concepts, as many entrepreneurs in this event would vouch, is one of the easier things. And then they get overwhelmed by doing so many free proof of concepts and pilots that they start doubting whether they will convert that into revenue or not. And the sales aspect of what problem you are solving, why that problem is urgent for the enterprise to solve, because everybody has limited budgets and everybody has to prioritize, and why they need to do it now and with you, is where the connection needs to be made. And I think that connection, a lot of times, we can help entrepreneurs think through and recraft their message to be able to help customers solve their problem.
So, there's a lot of CEOs of varying size of organizations, even in this audience today. You did allude to the loneliness at the top when you're the CEO, because everybody's looking to you rather than, rather than the other way around. And you've used outside influences and obviously others that have come along. The interesting part is that if you could expand, as you go into sales, it becomes lonelier because you are now convincing somebody else who has who doesn't think that there's a problem to solve to begin with, right? So that you don't have a solution. And you've gone across geographies in all your roles to sell. And you've also taken new services for that period of time. I'm sure when you went to South Africa, the last Indian that was famous they may have heard is probably Mahatma Gandhi. After that, you come along saying, "Hey, I can do better things with my services." If you could expand on this sales and the focus of how to get the customer to say yes to you, expand on that a little bit more. I think that'll be enlightening to this audience. Also, guys, just keep sending, and ladies and gentlemen, please send questions so that I can weave them into my conversation with Abid. You put them in your chat, and I'll keep asking them. Go ahead, Abid.
So Gowri, somebody very early on in my sales career told me that people do business with people they trust. So there is, number one, the need for creating a trusted relationship to whom you are trying to sell. They need to get fond of you, your idea, your passion, and there are many ways to do that. So that's almost like a prerequisite. It's necessary. It's important. The second thing that I've seen is that there is always a solution strategy. What you're solving, what problem of the customer you are solving, identifying the problem and speaking the customer's language. If the best way I gave example to my sales teams is if they're using a slide deck, because Microsoft PowerPoint, and you're all from Seattle, so Microsoft PowerPoint is one of the major tools for making a sales pitch. If you're not changing your pitch every time you're trying to meet a customer and selling the customer, you don't have a solution strategy, because you need to customize your message to the problem that you're trying to solve. And for that, spending a little more time on researching about the customer and what are the specific numbers, what are the specific strategy, and a lot of these things are available in the public domain. So this is not a huge customer intelligence activity that you need to kind of bring into your solution and create a solution strategy which fits the customer's current challenges. If the best thing you can kind of see that as a evidence that you've done it is if a customer tells you, those 2 pages from your PowerPoint deck, if you can email me, I want to use it for my board presentation. So then the customer starts borrowing your message and your pitch to sell internally as their idea, or as an idea that their principals and the executives within the customer would buy into. So that's the solution strategy that becomes important. And the third is what I call the sales strategy, because being in sales, you realize that just because you have the best product, it's not necessary that it'll sell. So you will have competition. It's random, especially in a B2B environment. It's seldom that somebody would be the only organization selling that product. Most likely, entrepreneurs hear that, oh, we've got 5 startups who visited us and who do exactly the same thing. So then you need to have a sales strategy. Why you need this problem to be solved is a solution strategy, but why I'm best placed to solve that problem of yours then becomes the sales strategy. Why I'm unique, why I'm better than any competition that may exist, and why I can solve it now for you, why it is important that you write a purchase order and give it to me so that I can get revenue out of it. So I think, in a nutshell, thinking it from these 3 lenses of building trust and a trusted relationship, becoming a trusted advisor, Number two, having a solution which is superior, which solves a solves a problem for the customer. And third, the way it solves this is unique to your own organization, so that the customer buys from your organization. A lot of times, startups complain that the customer got educated by all the pitches we made, and then they went and bought it from one of the large companies, because customers often use this phrase that you don't get fired for buying from a large organization. And sometimes the product may not be as superior as what a startup is offering, but customers risk mitigate. So creating the necessity and urgency to be buying from you are the three things that I would put as a framework for us to think about successful sales endeavor.
So I'm going to pick up on one thing, right? You talked about trust, and at some point, I'm sure that other companies thought, "Man, I'm competing with Wipro. That's might as well take the safe bet, right?" But how running such a large organization, diverse, set of people, how did you keep the purpose of their of why they are there, and how did you make sure that they understood that every day, the purpose of why the employees are there, the purpose of why everybody working with as big a company as Wipro, how did you communicate that, and how did you make sure that you got that across? Because what you're saying is they have to believe and they have to win trust. So that means they have to believe in what they're doing first in a company as big as yours. And it's the same even if you're running a small startup. Purpose is to be clear. How did you do that?
I think, of course, that is where the CEO has an important role in terms of being able to communicate the strategy, the mission, the vision, and more importantly, helping every employee understand how they kind of participate in delivering that to the customers, creating prioritization of, we exist because of customers, everything else kind of follows. Having said that, as I both during my Wipro days, as we worked, or throughout my career, when we worked with startups as partners, trying to take their solutions to customers, one of the things I realized is sometimes I feel, in a large company, it's easier, simply because a large company can afford a higher level of expertise and dedicated expertise. So, a large company can have a chief marketing officer who's been there, done that, and takes care of a lot of the content creation and brand creation. You have a HR team which would take care of a lot of the employee communication and interaction and stuff like that. It gets tougher with startups because with startups, the CEO and the founding team have to kind of wear a lot of those hats at the same time. And sometimes, that is why asking for mentorship and even asking for a part-time help with experts in that area could work much better. One of the things that we try to do at Dallas Venture Capital is to be able to provide some of that expertise on a part-time basis to entrepreneurs. And, AZ is here from CoreStack and a few other investments that we've made. We're available on the phone for being able to, get a question answered, or if we are not able to answer that question, connect to somebody whom we know through our network to help them answer that question. So that kind of is something that I feel that startups and smaller companies need even more of compared to larger companies.
So I'm going to pick up on one thing that you brought up, which is when you work with startups, right, as a big company. When you brought up Easy also, and there are other startups here in the audience. How do they work with companies big? Because B2B, at least to me, is channel sales at the moment. It's evolved into channel sales. Enterprises are buying many things, and they're looking to the Wipros of the world to bring together an end-to-end solution. Now, it could be that the startup offers a great solution that fits into the overall scheme of things, and like you said, bigger companies have a lot of resources. What would be the advice you would give to startups, especially in the B2B space, how they work with large companies? What do they need to have? What do they need to have more than patience? First, I'm sure they need patience, but other than that, they also need other things. What would your advice be to them?
So, Gowri, in all openness, I'm learning as much from some of the great and successful startups that I interact with as I'm advising them. So I'm just sharing what I have learned. And there's a few things that I've learned. Number one is, um, you know, startups being able to leverage partnerships and an ecosystem to be able to approach customers. And a lot I'm talking about is in the enterprise customers context, a B2B context, where, for example, analysts like Gartner, Forrester, others getting on their charts automatically brings you the visibility to buyers who may be looking at those charts to even create an initial shortlist and a conversation. You talked about, global system integrators like Wipro or TCS or Accenture or others, building those partnerships and relationships where they could become the channel and they could embed the startup technology, the startup product in their larger solution. Because invariably, a lot of the platforms and products that startups are building are tied to services to be able to deliver to enterprise customers. And GSIs are very good source to be able to do that. Technology companies today, for example, cloud players who are growing at 40-50% year on year, for their ability to grow, they need consumption of the cloud to happen. Now, invariably, a lot of technologies come which consume that cloud infrastructure, and hence making some of these technology companies as partners and leveraging their channel to get there. I've seen with some startups who do a very good job of having customer advisory panels. There are, like me, there are executives, both from customer side, some very senior CIOs who would be happy to mentor, become part of the advisory board, some of the colleagues from the service provider industry, from technology companies, and they have a network that enables for them to be able to pitch that idea, at least open doors for the first time. So those are some of the ways in which you get in front of a customer who has a need for that. After that, it is all about how do you complete the sales cycle. But the best startups I've seen is those who focus on a lot of what I said is business development, marketing kind of activity. And then you get a phone call and you are able to present and bid into enterprise customer.
So picking up on that theme, the startups obviously have a lot of challenges. And one of the challenges is attracting, A+ talent, right? Because there's always this risk both sides are taking. And coming to a startup has very different energy rhythm than working at big companies. A couple of questions that have come is how could CEOs attract great chief revenue officers, and especially if the CEOs themselves didn't come from a sales background, they come from either engineering background or non-sales background, because sales as a craft is different than other things a startup has to do. What advice you would give to startups today as to how they attract good salespeople and how they prepare to attract them?
So, again, my experience has been that there are two important criteria that a startup CEO should look for in sales, especially salespeople or teams that they are hiring from the larger pool of technology talent. Number one is their own personal ability to paint a vision of what they are trying to do. People don't mind joining smaller companies as long as the vision is about being big and making them partners in building that business, growing, creating something big, becoming a unicorn. So I think that is a personal connection that the founders and the CEOs need to establish to be able to have a talent that they want buy into the vision and then come and join. I give you my own example. I talked about joining TCS out of campus. The real story is that I wanted to go and work for an American bank. And the day before the American bank was coming to the campus to interview, TCS came to the campus. And, I had never given an interview, so I just went to practice an interview. But I got hired because there was a vision that was painted to me at that time, which talked about creating an Indian IT industry. And that attracted me towards that vision. So a lot of talent would join a company because you're able to kind of create passion and connect with the vision. The second thing which I would advise as a caution is that important criteria, especially when you're hiring from the corporate world, is higher risk takers. Because invariably, as much as you sell the opportunity, don't underestimate the risk that a startup has, the risk of success. And a lot of times when people come from the corporate world, there is a certain level of basic certainty and assurance that they seek, and even if they don't explicitly seek, they assume in the back of their mind. And when they come into a startup and they realize the level of uncertainty for success, those lonely moments that come when you start questioning yourself, if that individual is not able to handle that, very quickly those individuals go back to their comfort zones of working in the corporate world. And for that individual, it is okay. It was a good experiment. For the startup, where time is of essence, where you're moving from Series C to Series A to Series B to Series C, you've lost 6 months to a year in that endeavor. So, try to make sure that the people you are hiring that could not only do the job, but they understand the new culture they are coming into, the whole risk reward equation, and then go ahead and hire.
Before I ask the next question, if you guys could use the raise hand button and would like to ask the questions yourself, Madhu or Mini could, open up the unmute you, and then you could ask the question. It's just not that only I have to ask the questions. You can also ask the questions. The interesting thing that in your journey that you talked about, you took on a lot of new things, and whether even just I'm sure that being hired by TCS versus whatever the American bank that lost out on you was probably at that time riskier. So you seem like you naturally associate yourself with risk, but it was not all smooth, just straight, rocket ship, right? It had lots of changes and ups and downs, and it was never the way it was ever explained to you. Startups also, obviously, they get up and say, I got the best product, it's going to sell, and then they do the math in their head, and next thing you know, the valuation is growing. Obviously, that's mostly never that happens. It's a lot of work that adds up over time. It reaches the valuation it's supposed to reach. If a startup now, as you're advising them, and as they run into these walls and they have to get around them or climb over them, what from your experience you draw to tell them, hey, this is natural, expected, right? And do they even accept it that it's going to happen? They all believe that it won't happen. How have you been mentoring them and guiding them on that?
So that's a difficult question. One of the first advice I give when I advise startup CEOs is don't take all advice seriously. Because personally, if you ask me, when I look back, if I were to take advice of my well-wishers, I wouldn't have taken all those risks. I wouldn't have joined a company which at that time nobody knew, compared to the American brand, which everybody would have said, wow, right? So my friends, my colleagues actually brag that they got better jobs than me in a positive manner, right? When I went to South Africa compared to the US, my real well-wishing friends said, be careful what you're doing. They came to my wife. Some of them were such good well-wishers that they actually called up my wife and said, he's gone crazy, ask him to do the right thing. So risk taking is a difficult thing. You would be a successful entrepreneur because you have an idea that you see what others don't see. So that's a balance you strike. So the way I kind of look at it is get perspectives. Don't take advice. And once you get all-round perspectives, then you sit down and decide. Because in doing, blazing the trail, in doing something new, Mr. Premji, with whom I worked, has a very famous saying that if people are not laughing at your goals, then your goals are not audacious enough. So sometimes having skepticism, when I moved to, running a significant part of the company, at that time, the company was much smaller, but running a very significant part of the company, when I took over creating a new business within the organization, almost from scratch, some real well-wishers called me and asked me, have you fallen out of favor? What happened? You were running half the company and now you've been given this thing which has no people. And, in IT services or in general services business, how many people report to you is your statement of strength in an organization. And when you start a business, still, how many people report to you? Perhaps a couple of your support staff. So that time, if I would have listened to my advisors, I wouldn't have made that leap. So taking advice is important. Having mentors is important. But don't forget, a successful entrepreneur is successful because she has an idea which others at that point in time either don't have or don't see what she sees in terms of being able to make happen. And that's where I would say, get perspectives, digest those perspectives, and then chart your own way.
If I were writing copy for a article tomorrow morning, that would be my lead. They're saying, have perspective, don't take advice. That seems like the theme we got to go build on.
Gowri,
yeah.
I'm going to take you up on your offer if you don't mind. Ask a question.
Yes.
If that's okay.
Yeah, please go ahead.
Yes. Why don't you announce who it is? Because I can see so many people on my screen.
This is Ram Viswanathan. I run the Dallas chapter of TiE here in Dallas, and I have a grievance, Abidali. I have a grievance. You are a Dallasite, and somehow you are presenting to TiE Seattle and ahead of Dallas. Madhu and Gowri have beat me to it, I suppose.
It's because we're at the time.
But just kidding. I've talked to my good friend Dayakar, and he has promised me he'll get you to speak to our chapter very soon. I won't take any offense as long as you commit to talk to our group here. We have a very vibrant chapter here in Dallas. A lot of startup entrepreneurs will be able to benefit from your wisdom and insights. So thank you in advance, Abidali.
Absolutely.
Great. Well, he's going to talk to you. I think, was it Heather? I can see so many things. Madhu, you will.
Gowri, I'll go ahead. There's a couple of questions that are in the chat window if you're ready for them.
Okay.
We can,
yeah, go ahead.
We have a question here about winning trust back. You've talked a lot about the importance that you learned very early on about having the trust of the customer. If there's something beyond your control, which happens often, what are some advice you have for our CEOs here on how to win that trust back?
Number one is transparency. I've dealt with customers while building businesses and, with startup situations where, I had an example where for a very large pharmaceutical company, a startup was able to paint a vision of solving a very important problem for them in a very innovative manner. The customer started depending on that startup to solve that problem. After some time, while the pilots worked very well, when they got a larger contract, the ability to scale became a problem with the startup. In this case, it was through a global service provider as a channel partner. And then one of the things we learned quickly is that we were not being transparent to the customer. And I advised that, let's go and tell the customer. And the startup CEO later told me that he was surprised how understanding that customer was. He thought hell is going to break loose, the contract is going to get canceled and stuff like that. And guess what the customer said? Look, let's continue to do what we were doing the old way for 3 more months. Go back, you figured this problem out, solve your problem, we'll wait for 3 months and come back once you've solved it. And the transparency worked great. So winning trust or winning back trust when something goes wrong, the number 1 item is transparency. The number 2 item, which you would expect from your employees as well, is be there, show up. You should be seen as working day and night, going beyond the call of duty, which is much easy for startups to do than large corporations. Mm-hmm. That is where startups can outdo large organizations. Because, how many times if a large company's customer has an issue, they have access to the CEO. In a startup, the CEO could be talking every day to the customer saying, this is the progress we are making. This is what we're doing. This is how we are going out of the way. And customers appreciate when you're making investments beyond what you had planned. That wins trust. As long as the customer feels that you're not going to make them fail and put them in trouble due to lack of transparency and make the individual that has placed their trust in you look stupid. And second is, as long as you're showing that you're working day and night, working hard and making progress in solving that problem. Customers are very reasonable human beings. They understand that life is not perfect and life is not perfect for a startup.
Thank you. There's a lot of value in hearing you say that transparency, accountability, taking ownership in the situation, and having a direct line to the CEO can have a lot of impact when you're dealing with these larger organizations. Before we have another question that switches our gears a little bit. Before I go to that, is anyone in the audience, if you have a question you'd like that's kind of on a similar topic before we do so, please go ahead and chime in. Okay, well, if not, then the next question that I think will be kind of a broader question here is kind of now that you're in this new role in the last 3 months, as you mentioned, what about the B2B industry or the trends that you're seeing, during the pandemic, perhaps even post-pandemic, really, that you are excited about from an investment perspective? Are there industries, technologies, what is it that's kind of getting, especially you and as well as maybe your investment fund, interested in?
So yeah, a lot of exciting things are happening. CEOs of Fortune 500 companies who had 5-year, 7-year plans to implement their digital strategy have crunched it to 5 months, 7 months because of the pandemic. So they don't have all the solutions, and there's a huge opportunity for startups and new ideas to present themselves, and there's a lot of acceptability of that. A few trends that are becoming very obvious from where I see them is, number 1, I would talk about verticalization, especially in the B2B SaaS space that we at Dallas Venture Capital focus on. Everything that you can suffix with tech. So health tech, fintech, insurtech, agri-tech, ed tech. That verticalization is becoming sharper and sharper because now enterprises are looking for actual implementation of use cases for doing their processes differently. On the technology front, obviously, while cloud, robotic, with AI and others are becoming prime time, there is a lot of use cases in newer technology, especially around IoT, data and everything to do with machine learning and AI over there, deep learning and stuff, blockchain are all becoming reality, and customers, enterprises are willing to incorporate them into their services to their customers and consumers. So technologies, we see all of those technologies, especially 5G right now is seeing a lot of traction because it changes how you can communicate, how you can see LiDAR and some of the other things are becoming quite relevant from a technology perspective in the use cases that we see. The third thing, from a venture capitalist perspective than a customer perspective, is through the pandemic and the financial difficulties that it has, um, uh, the focus on generating revenues, generating profits, or at least from a EBITDA perspective or a cost of goods sold, gross margin perspective, focus on profits and generating cash is and will become a little more in focus for entrepreneurs. And entrepreneurs need to look at that from their business plan perspective, and more importantly, deliver on a plan that they articulate. So those are some of the trends that I see due to pandemic and in general. There's a lot of capital available. So the dearth is not of capital to be invested. There's very high liquidity in the market. But the quality, the flight to quality because of the risk environment is much higher. So there's much higher scrutiny on startups and how they're keeping their promises, how they are step by step moving in the direction that the vision that they had painted to the venture investors. So both from a customer perspective as well as from a venture capital perspective, I think there are certain trends which are very clearly emerging.
I think Madhu, you're on mute if you're talking.
Sorry. Did you have any other questions?
No, I was waiting to see if anybody else has questions. I have a couple that I could follow up on, but
Maybe
I
we
thought.
have time for one or two more before we switch gears. If you want to.
Yeah. If you have a question, can you guys hit the raise hand button so that we could unmute, or you could unmute?
I think, well, I'm responding to the chat window, so we're capturing all of them.
Oh, okay. Oh, you're looking at it. Okay, great. But that, sort of focusing a bit on availability of capital and where it's being deployed, right? What you alluded to. True, there is a lot of capital, and sometimes that chasing, a lot of deals, that skews valuation in a way that is that makes everybody else looking for capital thinking that their valuation is now much higher than where their product or their traction is. They think, oh, no, I'm going to, at PowerPoint, I'm worth 6 million. At Beta, I'm worth 50. There's this timeline they've gotten into their heads, as opposed to the metrics are, do you have a product? Is it a solution? And is it getting real traction? Shirish and I have, as part of Z-Fi Catalyst, have looked at a lot of local companies. As you are looking at it from Texas, is this valuation game becoming more difficult because now there's a lot of new people saying, I just want to fund something because they want to deploy capital. Is that skewing valuation than actually picking out and backing real companies with real stories and real solutions?
So as a public company CEO, one of the things I've learned is that available capital is a liability, or it's a trust that somebody has put in you. So you have to deliver to that trust. And I think feeling good about, valuations are always in some sense a confidence in your future that an investor places today. And that can very quickly change if you're not delivering to the future that you painted for the investor. In public companies, you can see it in the stock market every day. Entrepreneurs see it only when they go from one round of funding to the next round of funding. So I caution a lot of entrepreneurs that, don't get excited on the intermediate valuation, because that is more of, investors invest to get returns. And while they're very nice there when they're investing, they're not as nice when they don't get those returns. So my advice to entrepreneurs is that set the right expectations, and deliver to those expectations. That's what I learned as a public company CEO, and that's what kind of works the best. Otherwise, you could run expectations beyond reality, and you could get those valuations to a level where people are valuing your company based on the future that you've painted. If you're not able to deliver to that future, you'll have a challenge.
Great. We're coming up on the 7 o'clock mark, Madhu. So I have one last question if there are no other questions, right?
Please go ahead with the one last question, and then we can go to the next part.
So Abid, like all good conversations, you have to end with predictions for 2021. Other than we'll have a vaccine, that we know. We can't. So that I'm giving mulligan on that one. So you got to pick something, especially as a venture capitalist. What are your picks for? What are your predictions for 2021?
So again, I don't have a crystal ball. If you would have asked me in December of 19 predictions for 2020, I would have been 10 out of 10 wrong. Anything that I would have said. But I do think that we'll see accelerated trends, especially in the area where I'm more immersed, the B2B software, SaaS software space that is becoming prime time. The data, I don't have the 2020 data, but 2019, about $32 billion of capital got invested through venture capital into B2B SaaS companies. By 2021, I see that number crossing $100 billion. So there's a lot of capital that will get invested. Some of it will get invested in senior rounds compared to early stages, because some of those companies are now coming of age. They're becoming unicorn. The other thing that I see, and since this is TiE and there's a lot of audience who has connections with India, right now, if US has 200 unicorns, give or take a few, India has 20 unicorns. I think there will be more unicorns coming from other parts of the world. US and China have dominated that part. I'm very upbeat about the potential for India on that, especially even what you have seen in the last 3-4 months. So the whole startup activity will become more global, but especially will move relatively more or grow relatively more in India. And then a couple of things that I talked about already, there will be more focus on verticalization and addressing specific use cases by industry in 2021 and beyond. That will continue.
Great. I'm going to hold you to that. This is being recorded. We'll play it back to you next December. First of all, I want to thank you for taking the time. I know it's late where you are, so thank you very much. This has been a great, fun conversation. We've had a tough year, and to finish it off on such an upbeat conversation, it's been phenomenal. Thank you again, and to you, Madhu.
Thanks.
Thank you for having me, and happy holidays.
Yeah.
Thank you. Thank you for a really wonderful conversation, very inspiring, lots of really great anecdotes for us to take away, which I'm hoping we'll discuss here in the breakout rooms. I'm going to quickly introduce everyone. We're going to hear briefly an introduction to our esteemed board member and newly minted author who's released their book of Purpose Mindset. All of you will be receiving a copy of this book. Reminder to fill out your address so you can get a copy of it as well. I'm going to introduce everyone to Vijay Vashi. He is here on the line. He's one of the founding members of our specific chapter and was key in bringing TiE in general to our side of the world. He is a mentor and advisor to many in this Zoom room, for that matter, and across the Seattle ecosystem. He is someone who we can all look to as dearly for kind of setting the tone for entrepreneurship, given his extensive background here and his guiding light forward for TiE Seattle. So Vijay, please go ahead, and I appreciate an introduction to Akhtar. Okay, there you
So, like many of us, Akhtar needed help coming to the United States. He went to MIT to study architecture, and Aga Khan gave him a scholarship. And you and I have to thank Aga Khan, whose generosity made such an individual to come to the United States. He also benefited from that on trips that I've done with him to Europe and places like that. I got to learn a lot about architectural details that I never would have learned, along with a whole bunch of social venture stuff. Minor things like he was in Istanbul and he was told, arrange the drainage of the streets and the way the streets are organized so that the Marmara Sea or the Bosphorus Straits are blue as the Prime Minister's eyes. After I got done with PowerPoint and I decided to come back to Redmond, Akhtar cornered me one day and talked to me about digital partners. And that really appealed to me because he talked about how technology can change the lives of the unfortunate or the ones at the bottom of the pyramid. That really appealed to me a lot. And so I got excited about his effort, and I got a whole bunch of other people to join and donate money towards digital partners. And it gave birth to a lot of very exciting social venture startups. One day, Akhtar came to me and he said, hey, he's got a job offer from Microsoft. What should he do? And I said, idiot, this is so much more money to play with. Go for it. And I'll let Akhtar share his book and his knowledge from that experience on what he did with that whole lot of money. Thank you, Akhtar. It's good to have you around in my life.
I think Akhtar is on mute. There he is, yeah.
First of all, thank you all very much for giving me this opportunity, and to Abidali, a fascinating story. Gowri, what a wonderful moderation. This is just a highlight to sit and listen. And then, of course, Vijay's introduction is always fun. I would not have written this book had it not been for my wife, Alka, who joined Microsoft in 1993 and then came to Seattle in 1998, which got me closer to Microsoft. Clearly, the book would not have been written had it not been for Vijay, who actually invited me into Microsoft and hosted an event for digital partners, which is where I got to see the company and its generosity. The book, so Vijay, thank you very much. Yes, you did tell me, idiot, take the job. It is important when we look at ourselves. We are all highly competitive, hyper-competitive in some ways, growth mindset that are trying to make a difference through entrepreneurship and through technology. What also happened at Microsoft, which is what I share in my book, of discovering purpose and going beyond growth, is how one tiny effort by Mary Gates, Bill Gates' mother, that somehow cajoled her son to start a small payroll deduction program to United Way. That initial effort could have just been a moment, got transformed into a movement that has invested hundreds of millions of dollars, billions of dollars into communities around the world. And that happened because Bill Newcomb, who came in as the first chief legal officer, decided that these young individuals, it's a small company in 1985, will establish roots in this community, will have kids here, will grow up here, and need to be able to invest back into this community. And I think that's the story of how a company can provide opportunities for individuals to discover purpose. Because purpose is that ability to renew and replenish your energy so that you continue to participate in the company in the most effective way. iCertis, which we all know, Vijay sits on the board, Samir Bodas, our colleague on the board, is the founder and CEO. In March, when we shut down, one of his employees called him up and said, hey, my wife is a school teacher. Kids are not going to be fed food. Can we help out? The company feeds its employees. They're no longer going to be there. And he basically agreed to donate that money so food can be provided for kids. That transformed his whole principle of Forte, which he proudly talks about as the values of the company, into something that became an action. And I think that is essentially what I'm trying to portray, that it is not just large companies that have the ability to provide a space for individuals to continue to discover their purpose, but it is every organization can do that. And in doing so, you're actually shifting the conversation from just growth, which is important, which is focused on the individual and the company, but it is about going from the focus on the me to the we. And during this time, when we are so locked up in our own environments, this ability to focus on something that is larger, that breaks down barriers and differences, is the story that I talk about. And I hope that all of you enjoy reading the book. I would love to get your insights in terms of how you are shifting your purpose and how you're amplifying it in your companies and in your organization. So Madhu and Minnie, thank you for the opportunity. And I'm waiting for now the next book from our board member, Shirish Nadkarni, which is actually out sometime in August, and we'll kind of get to read that and hear from that. So thank you all very much.
Thank you so much, Akhtar. That was a really great anecdotes about what's to come in the book. It's a good time of year to be thinking about the purpose, a lot of reflection time during this year, I imagine, and as we look into 2021 as well. I'm very much looking forward to it, so thank you.